Hi there, welcome back to Market Fatafat. You're watching ET Now. Thanks so much for staying tuned with us. We now have Arpit Beriwal, Manager Derivatives Analyst, Equity Research at Motilal Oswal Financial Services joining us. Arpit, hi, thanks so much for joining us and good afternoon to you. Let's get started with your first stock on the charts. You've picked out CDSL for us. Now, this is a name that we're hearing across the board coming in from analysts. What's making the stock so attractive? Because year to date itself, the stock has almost doubled itself. The share price has doubled. Tell us what's the outlook going ahead, and do you think the good momentum that the stock has seen will continue going ahead, or time now for some slowdown?
So if you see overall, very good momentum is seen across financial intermediaries, exchanges, and related financial transaction stocks. So this has been the theme for this year. So if you see overall also sector-wise, whenever we have seen correction in the last couple of months, however, this overall space, whether it's CDSL or the exchange stock, have been quite strong. So now if you talk about CDSL, technically the stock is in strong uptrend. On the monthly scale, it was moving slowly, steadily higher. However, last week it has given a massive range breakout above 1750 levels almost after 15 weeks. That is classical pole and flag breakout, and that clearly states that positionally we are expecting good rally towards 2000, 2200 plus zones. So over on the immediate basis, we have seen a sharp rally from 1700 to 1850, but this rally has still more leg because this has been the theme. And looking at the chart setup on multi-time frame analysis, it is in very strong uptrend. So one can go long positionally from 15 days to 2 months perspective, buying in the zone of 1830 to 1850 with keeping stop loss of 1720 for an upside move towards 2000 and then 2200 zones.
Alright, moving on to the next counter that is in focus today, and that's Vodafone Idea, which is in focus today on the back of the fact that they've announced plans to raise 2,000 crore rupees through preferential equity issuance to its promoters, Vodafone Group. In a regulatory filing, the debt-laden telecom giant confirmed that its board will be meeting on the 9th of December 2024 to review and approve the fundraising proposal. And remember, they had sold their stake in Indus also, to pair their debt, and this is another reason why Vodafone Idea is now going to raise funds to pair their debt. And on the back of that, Vodafone Idea has given up those morning gains, but nonetheless trading with gains of 0.3% right now.
So that's Vodafone Idea in focus, slightly flat but still trading with some gains. Ria, you've picked out Torrent Power for us, now fundraising on the back of a QIB. Tell us all the details about this.
Well, absolutely. So yesterday, Torrent Power has closed the rupees 3,500 crore QIP yesterday, and they've allotted 2.32 crore equity shares to the qualified institutional buyers at an issue price of rupees 1,503 per equity share, which is at a discount of around 3.4% to the floor price of rupees 1,555.75. Now, nearly half of the shares on offer, or to be accurate, 49.14% of the QIP shares have been issued to various schemes of SBI Mutual Fund, and further Kotak Mutual Fund, New World Fund and Nippon Life are some of the other institutions who have been issued more than 5% of the QIP shares. However, the company hasn't specified how it intends to deploy these funds. Now, because it's come at such a discount to the floor price, we are seeing the stock falling by around 1.4% right now.
Keeping an eye out on how the company manages to deploy these funds, what's the plan. But let's move on, talk about another stock that's in pressure ever since the opening bell today, and that's Ola Electric. Now, the stock slipped after the Central Consumer Protection Authority, which is the CCPA, sought additional documents and information from Ola Electric with regard to the show cause notice issued by October relating to the 10,644 complaints that it had earlier received. Now, it further said that the CCPA has provided a timeline of 15 days for the company to submit the response in respect of seeking additional documents and information. Ola Electric said that it would ensure a timely response within the specified time frame. Just to brush up a little bit and going into the past, they had received a couple of complaints and inquiry requests coming in from CCPA just a month ago on the back of the alleged whitewashing of more than these 10,000 complaints. And Ola has asked for a little bit more time on that front. They've said that they will cooperate. But on the back of this news flow, the stock is down almost 2.5% as we speak.
All right, moving on then. Persistent system is what you've picked out for us, Arpit. Now, this counter has been on the red hot for quite a few techies. Tell us, what are you seeing on the charts for this one? It has given some good moves, and in fact, it is one of the IT stocks that has done pretty well for itself, holding out in the correction that we saw coming in the markets.
So before talking about persistent, if we see overall IT index has been a big outperformer. and we have been quite bullish on the IT sector as a whole. So in spite of Nifty correction in last 2 months of almost 10%, Nifty IT was trading a live highs, and this we have seen after a sharp supportive move from low levels. IT index is again back to its trading live high territories. So within that mid cap space, if we see Persistent having a very huge outperformer. If you see technically the structure on the monthly scale, it is continuously forming higher lows. In the weekly scale, slowly steadily the base of the stock is shifting higher. And last week only it gave a range breakout above 58-57 zones, and slowly steadily we have seen an uptick is continuing. So overall, looking at the chart structure on all time frame, it is moving in a higher zone, trading above the short-term moving averages, and definitely we can scale new record highs in coming weeks. So Persistent within the mid cap space would be a preferred pick. One can go long at current levels with keeping stop loss of 5950 for an upside move towards 6500 zones.
All right, that's the word coming in on Persistent Systems. But another stock that is in focus today is RITES, that has been appointed, as the project management consultant at the PMC for the Phase 2 campus development of Indian Institute of Management, IIM, Raipur. Now, the project is valued at 148 crore rupees, that involves end-to-end management of construction, supervision and monitoring. Now, the campus is expected to be completed within 23 months. And on the back of this order win, RITES is in focus today with gains of 2.7%.
Pretty smartly is right on the back of an order win. Ria Swiggy is once again in focus. We've spoken about this stock every day since they've released their Q2 numbers on Monday. Tell us today which brokerage has come out with a note, because that's the reason why this stock has been a buzz every day since Monday.
Well, absolutely. So today, HSBC has initiated coverage on Swiggy with a hold rating and a target price of rupees 550. Now, what they've said is that Swiggy is a pioneer in both the food delivery and quick commerce spaces, but it hasn't been able to sustain its early mover advantage. And going forward, catching up on both growth and profitability could be challenging in light of the severe competitive intensity, and also that the measures such as to improve margins, such as raising delivery charges or reducing discounts, might weaken Swiggy's competitive edge going forward. Now, HSBC has also attributed Swiggy's lag in the quick commerce space to a slower pace of dark store additions, with Instamart expanding at a 20% CAGR compared to Blinkit's 45%. And they've also valued Swiggy at around $16 billion, including $5 billion for the food delivery, $10 billion for quick commerce, and about $1.3 billion in cash and investments. However, they do not foresee EBITDA break even for the overall business before fiscal 2028. On the back of this, Swiggy was up around 2% in trade today, but right now we are seeing it giving up some of those gains.
All right, that's Swiggy. But moving on to SBI, Arpit. SBI, this counter, it hasn't really done much, from the PSU banks. And in fact, the entire re-rating in the sector, PSU banks that have started moving up now. Do you see SBI to finally now follow suit and, see an uptick from here on?
If you see overall the banking sector has been the silver lining across the market setup. And if you see especially PSU banks, within the PSU banks, SBI has been a preferred pick. On the chart wise, if you see from past couple of months, it's trading in a broader range. But the good part is that as soon as we see some momentum in banking stock, this is a counter to lead for. So technically, it has given a range breakout on the weekly scale above 845, 850 levels. On the daily scale also, it is moving higher highs, higher lows. And if you see banking stock, the major contributor has been for the bank nifty has been done by SBI. So positionally also, overall looking at the setup, we can easily scale SBI to new record highs in couple of weeks. So SBI risk reward is quite favorable at current juncture. One can go long at current levels with keeping stop loss of 825 for an upside move towards 900, that is previous life high, and then new record highs towards 950 zones.
Expecting an all-time high on SBI. That's quite interesting to know. Let's keep it going with the banking space then. And Canara Bank is the one that we wish to highlight, because Reserve Bank of India has given its nod to Canara Bank to divest its shareholding in Canara Robeco Asset Management Company as well as Canara HSBC Life Insurance Company by 13 and 14.5% respectively through an IPO. Now, in its filing to the exchanges on Thursday, the state lender informed about receiving a letter from the RBI on the same. Further, the Indian Central Bank has intimated the Canara Bank that it is required to adhere to 31st October 2029 timeline. That's the timeline for bringing its stake in these entities up to 30% in accordance with the exemption granted by the Government of India. So on the back of that, the Canara Bank in fact needs to roll out an IPO to divest its stake in both of these companies. And on the back of this news, for the stock is up almost 1.5% as we speak.
All right, moving on from the banking pack to Dixon Tech, Arpit, this stock has more than doubled itself in the year to date, and this stock fires on all cylinders. Now it has moved up so much that do you see more upside on this one, or is it time to book profits now?
If you see overall, Dixon Tech has been the theme, and if you see overall the EMS thing, the electronic manufacturing sector has done tremendously well, and we have been quite bullish on this counter right from 12,000 odd levels. If you see the setup wise from last 18 months, it is forming higher highs, higher low structure that clearly indicates that bulls are dominating at every dip. From last couple of weeks, it was consolidating in between 15,000 to 16,000 zone. However, last week we have seen a massive range breakout above 16,000 levels and almost a rally of 10% from there on. But looking at the overall position setup, we are still bullish on this counter, and definitely we can see another 10 to 15% rally from here on in coming month. So looking at the charts wise, we are quite bullish. One can go long at current levels or minor dip between 17,100 to 17,300 with keeping stop loss of 16,600 for a new life high territory towards 18,000 and then 18,500 zones position.
Okay, so those are the levels that you're watching on Dixon Tech, but here's something on the programming note then, and Hamish McRae is one of Europe's foremost speakers on global future trends in economics, technology, business and society. He examines how complex forces of change, demography, the environment, finance, technology and ideas about governance will affect our global society. At India Economic Conclave, he will be speaking on world economy in 2050. Let's listen into what he has to say.
Hamish McRae. In my book, The World in 2050, I explore the trends that will help nations survive the great global economic challenges. At the Times Network India Economic Conclave, I will discuss why this is India's decade and what will drive its journey to becoming the third largest economy in the world in the years ahead.
All right, moving on then, Wali Nisar is the Majid Kaduri Professor of International Affairs and Middle East Studies at John Hopkins SAIS and non-resident senior fellow at Atlantic Council's South Asia Center, globally renowned scholar and expert on Middle East politics, international relations and economic development. We will also be having them at the conclave as a special feature. Do not miss out on that.
Has made the country a significant leader in South Asia and a formidable ally for international cooperation. At the Times Network India Economic Conclave, I will discuss India's influence in global geopolitics and how the country can fast-track the journey to a top 3 world economy.
Hi there, welcome back to Market Fatafat. Let's talk about a stock that's been under the pressure ever since the opening bell, and that's Nykaa. Nykaa is in focus. And now, remember the parent, which is FSN E-Ventures, that operates the beauty company and fashion retailer Nykaa. They've announced yesterday that Nykaa Fashion's Chief Executive Officer, the CEO, Nihir Parikh, has resigned and been immediately relieved of his duties. Nykaa Fashion is the fashion vertical of FSN E-Commerce Ventures Limited, and remember, Parikh resigned after holding several management roles at Nykaa for almost a decade. Nihir Parikh started in Nykaa as Chief Strategy Officer in 2015, went on to lead as Chief Business Officer in 2016 for the next 5 years. In 2021, Parikh was promoted to CEO of Nykaa Man and Head of Retail before becoming the CEO of Nykaa Fashion in 2023 and continuing as Chief of Nykaa Man. And this resignation has come really surprisingly because it's been accepted by the company. They wish him well going ahead, and it's been undertaken with immediate effect, and he has been released from his duties post the close of business hours yesterday. So well, that's a negative news flow coming in. There's no further announcement on who is going to be replacing him in this role, but as of now the stock is down 2% as we speak.
Right, moving on and coming to you, Arpit, you picked out Titan for us. Now, this counter has started really gaining in the last 1 month. Before that, it has been giving very, decent, not even decent move. It hasn't given much returns in the last 1 month. It has really started seeing an uptick. Tell us, where do you see this headed?
If you see overall Titan, as rightly mentioned, we have been seeing the stock has been trading in a broader range from last couple of months. In fact, between 3,100 to 3,800 zones on the upper band, and this has been the nature of the stock. As soon as the stock corrects towards 3,000 levels, the stock finds some support and then buying interest is visible. So on the weekly scale, it has formed a strong bullish candle, kind of a double bottom pattern, that is a bullish reversal pattern, and it gave a range breaker above 3380 levels that clearly indicates that the buyers are again getting grip onto it. And as we see, the wedding season and the festivities are going around, so we have seen a lot of traction in consumer stocks. So technically also, if we see, it's a very strong setup on the weekly scale, and the risk reward is quite favorable because it's earning from the lower zone. So slowly steadily we can again see the stock to move towards 3600 3650 zones in couple of weeks. So Titan would be a preferred pick within the consumer segment. One can go long at current levels with keeping stop loss of 3360 for an upside move towards 3550 and then 3650 zones.
All right, that's Titan on the charts. But the big news for today was the RBI governor slashing that CRR rate by 50 basis points to 4% now. And a couple of banking names that are in focus today: HDFC, Axis, Bank of Baroda, PNB. In fact, as far as the PSU names are concerned, SBI, BOB, PNB, they are all going to see higher benefits. And why? Because the CRR rate cut is by 50 basis points to 4%. Now, this will be completed in two tranches. 1.1 lakh crore of liquidity will be provided through this operation, and there's a city stake coming in. They say that a 25 to 50 basis CRR cut could provide a modest NIM support of 2 to 3 basis points. Now, as proportion of NII and PPOP, the adjustment will be favorable for lenders with lower NIM profile, and sentimentally this would be a positive for the banks with lower LCR and a stretched LDR. Now, CRR can be viewed favorable for, like I said, HDFC Bank, Axis, and for PSU names there is SBI and BOB and PNB that will see higher benefits, and they believe that banks will continue to be conservative and selective in lending to NBFCs depending on the rating and the product profile. So on the back of that, big news coming in, banks are going to be in focus today.
Okay, so banks continuing to gain. Nifty Bank not doing all that much, but banks are looking really good right now on an individual basis. But shifting focus then from banks to pharma, Ria, you've picked out Divi's Labs for us. Tell us what's the news flow, because the company was in focus yesterday as well. So tell us what's the update coming in today.
Well, absolutely. So Divi's Labs has been in focus on the back of the US Appeals Court's decision yesterday that Novartis, with whom DVS has a significant CDMO contract, cannot block the generic version of a drug called Entresto. Now, yesterday we saw a sharp fall in the stock price because of this, but today BofA has come out with a note on Divi's Labs. They've maintained their buy stance on the stock with a target price of rupees 6,850. They've also said that the company's 30% EPS CAGR over FY25 to 27 is not dependent on biosecure order wins, and they see limited impact from slower recovery in the CRO business as well. We also see confidence in medium-term earnings recovery, along with an upside from opportunities like GLP-1 supplies as well as macro tailwinds. Now, they've also mentioned that biosecure upside is an optionality for Divi's, and that future growth will also be supported by the new capex in Kakinada being commissioned in the March 25 quarter. Now, on the back of this note coming in from BofA, we are seeing some comfort on the stock prices today. Right now, it is up just about 0.5%.
All right, with that, we're completely out of time on this edition of Market Fatafat. Ria and Arpit, thank you so much for taking the time out and joining us. But before we leave, we'll take you to an ET Now exclusive that the government is planning to implement national single window system with GST in for sugar millers for December end. Now, Samir Dikshit is joining in with exclusive details of that story. Let's go across and take a look.
In a move to bring transparency in the sugar sector and also to provide relief to the consumers by keeping the prices of sugar under control, the government plans to integrate national single window system with the GSTN, and this integration is likely to take place by the end of this month. And with this integration, government understands that the quantity of sugar produced by the sugar millers or the producers, and whatever the quantity that is being sold in the market, that will be cross-checked, it will be verified, and the government will be having a clear picture that what quantity is being produced by the millers, and the sale sales as well. So with this intention, the government plans to integrate the National Single Window System and GSTIN portal. And government has been receiving inputs from multiple sources that earlier the sugar producers, they were not actually providing the right picture to the government, to the ministry. Earlier, whatever the quantity that is being produced, this number was provided a bit late, duration was not matched, and also it was seen that the quantum that is being produced, less was given to the government, and then a larger quantity was being sold in the market. So there was a gray area when it comes to the actual data and the ground reality. So with this purpose, to maintain a proper transparency, government plans to integrate the portal with the GSTN portal, and government understand that this will also help to check the availability of stock, the stock availability, and also this will help to identify that yes, sugar prices are under control, and wherever there is a requirement, government can actually provide and step in by providing the sugar in the much demanded area.
Okay, thanks Samir for taking us through all of that. So that's an ET Now exclusive for you. But on that note, I'm afraid we're completely timed out on this edition of Market Fatafat. Ankita and I will see you on Monday, but you stay tuned to ET Now because closing trades is up next.
If you like this video, then like, share and subscribe to ET Now.